The Fed cut rates again, and no, mortgage rates didn't magically fall off a cliff. And what that tells us, it actually tells us a lot about where this market is actually heading. The market, and I'm seeing it with my own listings and my own business, the market's not broken. It's definitely not booming. What it's doing is recalibrating. And recalibrations, they always feel confusing in real time, but that's really what's happening. I've noticed it with my own business, listings that were sitting for quite a while. In the last 2 weeks, we've accepted offers on several of them. He cut short-term rates again this week. That was exactly what the market expected. Because it was expected, the mortgage rates barely moved. And that's really what's important. The markets don't react to headlines. They react to surprises. And unfortunately, this was not one of them. Powell had already hinted at fewer rate cuts ahead, with the next meaningful ones pushed into late 2026 and 2027. So we're not heading back to the 3% rate anytime soon. It's going to be a long road ahead for the most part. Now, let's look at national housing and let's just look at the big picture. Home price growth has slowed to just over 1% nationally. That is a huge deceleration. Inventory is now over 1 million active listings. That's the highest that we've seen in years. Roughly 1 in 5 listings is cutting the price. So buyers haven't quite disappeared. Like I said, we've moved our listing inventory in the last 2 weeks. Oddly enough, since Thanksgiving to now, we moved more listings than we've been able to move in the last couple months. So what that says to me is buyers have just become more selective. They've become more patient and, most importantly, payment focused. Now let's talk about Metro Detroit. Locally, the story is even clearer. Inventory is rising faster than demand. New listings are up year to date, while pending and closed sales are down. So you've got the reverse, right? Inventory up, demand down. The month supply of inventory is climbing, which means buyers have way more leverage than they've had in years. We're seeing reductions outpace accepted offers week after week. That does not mean that homes are not selling, though. It means that only the best priced and the best presented homes are selling. So what does all this mean for Metro Detroit buyers and sellers? Well, let's break it down real quick. If you're buying right now in Metro Detroit, you finally have options. You finally have negotiation power. You're not competing against 20 offers anymore. But listen, waiting around for the perfect rate, that could cost you way more in price than you actually save in your monthly payment. I'm definitely going to say that again. Waiting for the perfect rate could cost you more in price than you actually save in your monthly payment. Now, what does all this mean for sellers in Metro Detroit? The market still rewards realism. When I say that, I mean pricing ahead of the market, right? So sellers have to be realistic. You have to price it correctly from day one. The homes that are selling are priced correctly from day one, and they're often gone in the first 2 weeks on market. Homes that chase the market with reductions, those are just sitting and sitting and sitting. So we need to stop chasing the market and price ahead of the market. This is no longer a test the market moment. It's a strategy first moment.